Welcome back to another video. Today, we're going to be talking about hard money lending. Now, if you're in the real estate field and want to invest in properties, fix and flips, the BRRRR method, new construction, you know that the regular FHA and conventional sometimes isn't the best choice. Again, if you want to go those routes, absolutely. There's a lot of pros and cons for every decision. But I want to talk about hard money loans. Now, with hard money, you do not need pay stubs, income verification, your tax returns. It really focuses on three things: the deal itself, your down payment, and your credit score. That's all that's needed in terms of getting you approved and getting you funded to start your fix and flip journey. Now, in the mentorship program that we have, and if you haven't heard of it, you should check out this video because I talk about our mentorship program, but we had a guest speaker from ARCAD Capital, the actual CEO of ARCAD Capital, a nationwide hard money lender. And I thought what he said was really important, and I wanted to share it with you guys.
So again, ARCAD Capital is the name of the company. It really is a sister company to ARCAD Group. ARCAD Group is how we started back in 2001 as ARCAD Group. Technically, a little bit earlier as myself, but the name is obviously something that's carried on. And when it came to this, it was almost an obvious choice. So the goal from day one was disruption. Disruption in the sense that we were not lenders. None of us came from a world of money per se. My daddy wasn't a banker, and neither was my mom for that matter. Nor did we have a silver spoon to feed those desires. So we, as many of you will, and as many others out there, we don't necessarily have an easy road to finance and to ownership, to the American dream, right? It becomes quite difficult. It becomes expensive. Raising money to some is extremely easy. To some is a concept that you haven't even really dabbled into or thought it through. So at any point, the ultimate goal was always one of the same: to really make financing available for people, to sort of water down in many ways all the confusing terms and gimmicks and extra fees and hidden costs that frankly we were dealing with as real estate investors. So as we're going through our house flipping career, we've realized that our lenders are making perhaps at times even more money than we are in certain deals. Granted, as we get better and better, that the tables change, but we're questioning the position that a lender has in this game, and that makes us look into the business a little bit more. And when we get to find the business, we realize that is exactly what some of you guys think it is, or it was. It's an old business. The lending business is a very old business. This is private lending, so it's an old private peer-to-peer business that has been sort of inflated and ran in a very nonchalant way for literally decades. People lend people money. It's a very common thing. But we wanted to bring sort of a structure, a little more structure to it, a little more continuity, a little more redundancy, right? Like we wanted people to understand simplicity rather than getting caught up on the complications of borrowing money. So from the beginning, when we started ARCAD Capital back in 2018, we really wanted to push the envelope by introducing technology and introducing just simplicity to the game.
So you want to buy an investment property, but you're hearing everyone saying that they're using other people's money. And what they're using is a hard money lender. Now, a lender doesn't care about your bank statements, your pay stubs, your tax returns. They really focus on three things, and that is your credit score, your experience, and your down payment. Now, here are the rates of the lender that I currently use. Highly, highly recommend. Now, the best part about this lender, not only are they transparent with everything, is if you do have a deal, they have a quick quote form. So basically plug in all that information about the deal. They won't run your credit, they won't charge you, and they'll send you a term sheet in about 24 hours of all your rates, your terms, and your expenses. So you'll get a full sheet of everything that you would have to pay if you go on this deal. Now, if you like what you see, you just approve the terms, run your credit, and go on to the process of purchasing your investment property.
Awesome. I completely forgot to put that in there, but I should have put it in the beginning. At any rate, this is our team, our core team. what makes us a little bit different is that every person that you guys see in there, including Souad, we come from different backgrounds, right? Like we work where some of us, like it's stated there, are investors, we're developers. There's a property manager in there. There's Souad, who's a wholesaler, builders, realtors. There are 3 realtors in that group. And bringing all that capacity together into the lending side of things allows us to look at the business from a different angle and in fact work with and really bring insight to areas of real estate that really haven't had much of it. For instance, wholesaling. For those of you who have used our POF, our POF approval, I have gotten a taste of it. We understood that one of the challenges that wholesalers had from the very beginning was making legitimate offers that when a seller gets, he doesn't just rip up and throw to the garbage, right? An offer that's fully backed by a hard money lender, a lender that's verifiable. The seller has and do often pick up the phone and verify that your offer that you submitted for their house could actually be funded if that is what you're claiming you're going to do. So more often than not, wholesalers really forget about the fact that there is a decision maker on the other end who's going to base that decision on facts, on the real ability to be able to purchase this property. And more often than not, they just pass on your offer without even considering it. So at any rate, this is our team, and I'm sure you guys will hear more of them and see them around. Now, the next couple of slides that I'm going to show you guys, I really went on a little bit of a little creative madness here. And the reason why I want to show you this more than anything is simply because I want you to understand that real estate is a linear business. Real estate is almost like a lifestyle in many ways. So there are multiple paths to this game, literally so many of them. And it's like a candy store. As long as you follow your fundamentals and as long as you do the right thing above anything else, right? To people that work for you, to people that work with you, and ultimately to the other side, right? The consumers, people you sell properties to, people you rent to, and people you buy property from. You realize that multiple avenues will open up. And in my case, in our kid's case, really, it's been one of performance. Yes, we do what we say we do, and that has allowed us to get access to a lot of capital. When you combine those two, it makes your real estate story grow. It makes you be able to dabble into different things. So the chart that I'm going to show you next, I've never really shown anyone. I've never shown anyone. I showed it to Souad 20 minutes ago. But we put it together and it's a little peek on our story. Not that it has to be your story, but understand that everything that you've thought about, perhaps one day doing it, the idea of like starting with one house and then maybe you can do 10 and maybe you can own 50 and maybe you can own 150 apartments and maybe you can build houses. All that is our story. And Wholesale Discord is the newest baby to that story. So I guess thank you guys for listening to my gibberish, and I hope my craziness makes sense. So it's a timeline from when I first started as Arcade all the way to now. It's set up in 2-year intervals. And its purpose is really to show you how we've evolved from our first house in 2001 to by the time I graduated Rutgers, I owned 4 rentals and I had done 6 ground up flips. A little bit different strategy back then. It's not as common now, but prices were going up so fast that you can wholesale contracts on ground up deals on houses that hadn't even been built yet. It's what we were doing. Well, what I was doing. I'm a lone ranger at this point. I'm going through Rutgers, and this is my part-time job. I flip contracts, I buy rentals, I pretend to be a landlord, and I study and I party a whole lot. So my first 10 deals by the time I left Rutgers, that was happening. So as some of you guys know, somewhere around 2008, we were big believers of markets crashing. We believed this was gonna bottom out, and it did. So what you see here is our story from 2008 to roughly 2012, when we are buying short sales. And we are buying a lot of short sales. We're wholesaling them. We're not taking title to some. Eventually, we take title to a few, but we're really just passing title to end buyers. We do this for a few years. In 2012, what you see here is we start building houses. The market had changed a little bit. It had improved, so we decided to start building and doing rehabs and attic levels in premier towns in New Jersey. Attic levels, buying a ranch, single family, single story ranch property, and adding a second and a third story to it. In essence, pushing the equity so hard, you're taking a little house in the 100,000s to a big house in the 600,000s. So it's a hell of a strategy. So we did that for a few years. That led us also into landlording, because these deals were taking a long time. So we wanted to collect cash flow, and that's what you see here. We started building new homes around that time as well. And you see some of those luxury homes here. And that was a debacle. So I'm not really proud of that. But somewhere around 2016, we also decide that we're big boy enough to launch our own hard money lending company. So we borrow a ton of money, we leverage everything we got, we put it all out there, and we launch Arcade Capital. And this is a little longer. It's in 2018. We got an award for it. That was cool. There's another award. And it's not until 2020, 21 actually, that Souad and I meet each other and decide that wholesaling has gotten old and stale, and there could be new systems and new methods to improve it, as technology, of course, as you guys know, has evolved. And we decide to launch DBN, Direct Buyers Nationwide, which also became, you see RE Invest Tools there, but this is the newest version of Wholesale Discord. And I'll get back to you guys on the name change and all that. You'll hear about it. Anyway, so the reason I'm showing you this timeline again is because I want you, for those of you that are thinking out there, how does this work? How does this evolve? How do I get to 20, 30 houses? How do I become the landlord that owns an entire block? This is kind of how. I mean, I'm not telling you go become a hard money lender or launch your tech company. What I'm telling you is it goes in stages, right? It's a succession. It's as long as you start strong, you continue to evolve, and as you continue to evolve, you start to gamble, you start to build, you start to own rentals and so on. So this is our 20-year story, and I don't know. I hope to anyone out there that's sort of in that weird, like, doubtful place where you don't know if this is worth it. Understand that this is a lifetime career that can bring you not just wealth and freedom, but a lot of fun. To me, hard money lending is fun. I enable real estate investors all across the US to get to that next point, that next level, that next deal. And I have countless stories of people that started with no deals and now own 20 houses. So it's quite fulfilling. So needless to say, Wholesale Discord is another version of that. We realized that rehabbers needed money and wholesalers needed knowledge and tools to get deals. So anyway, so that's our story, and that's that. Why us? Experience first and foremost. You've never dealt with me on putting deals together. If I may say so myself, I'm quite creative, and I can think of 4 scenarios at any given point for any one given deal. So it's been quite effective, and of course the lending side, the investing side of things brings a lot of insight to lending money to someone. It's not just lending you money, it's literally helping you draw a blueprint of the step-by-steps that are going to happen over the next 6 months and how you're going to win through it. Low rates, extra fees, we're sort of known for that. We slashed a lot of the fat, a lot of the greed, a lot of the extra fees that were just commonly known in hard money. We managed to little by little get it all out of the picture. Flexible and creative. Look, if I can't do it, if I can't put it together creatively, let me know when somebody does, kind of thing. I strongly believe in that. We're very flexible when it comes to this thing. We want people's business, but we want our relationships are very in line with each other. If we believe that you are going to perform and you're going to do well, inherently it means that we're going to do well. So we're quite creative and flexible with stuff, and they're very personal. You're not dealing with a massive, although we're nationwide, we're very automated with things, and communication is quite important to us. So we're on text basis with most of our borrowers. We're on speed dial basis type of thing. We've Zooms and the whole nine. These are our programs. We have 10 programs, and the overall gist of it, what I want you to understand is kind of like wholesale Discord. We're a one-stop shop, right? The idea is to have relevant programs that you, your partners, can utilize right away, right? You can put it to work. You're not decoding things. You just know that if you found an apartment building that you want to rehab, we have it, and this is how it works. Or perhaps you found a piece of land that you want to build on, right? We got it. So bridge is really a pseudo term for short term, right? So bridge, we bridge you from point A to B. Generally speaking, those are 9 to 12 month to 24-month loans. So short term, the idea is we help you buy something, we help you fix something or build something, and soon thereafter, either you're going to refinance us out or you're going to sell the property off, right? So we fund fix and flip at a levels, our own little core key program. We have done at a levels. We know how to add square footage to houses. So we created a program specifically to help you add square footage to houses. Mixed use and multifamily 5 to 55, meaning we can fund little 2 to 4 family houses all the way to 55 unit apartment buildings. These are our rental products. So short-term and long-term is really what we offer. Now the long-term product it's sort of the new kid in town, right? It has become relevant and present literally over the last 5 years. Before that, this was bank money. Only banks gave you or had this money available. Now Wall Street's in the game, so this product has become available. This is what commonly known as DSCR loans, residential rental loans, and so on. These come in handy when you or your end buyer or when you're wholesaling a property, let's say to an end buyer, that end buyer can get a rental loan. Let's say you got a wholesale deal with a tenant in it, right? Your end buyer doesn't want to live in it. Your end buyer is a landlord. Now you can wholesale your end buyer this property with one of these loans, or you can sell it to them cash and your end buyer can come in and refinance himself out of that loan. So get his money back out and then do it again with you. So they obviously do the same with bridge loans, but rental loans is sort of opens up a whole new avenue for wholesalers that truly wasn't there a few years ago. And same scenario. So we have your standard 1 to 4 family rentals. We have short-term stay, so Airbnb. Big business out there. If any of you guys out there own any or are thinking about owning any, know that there are loans specifically tailored to short-term stay properties, which is not the same as like a regular rental property. Portfolios, more than one house, 3, 4, 5 at the time, and of course apartment buildings and mixed-use buildings. So I'm gonna move on to this. I kind of want to get you guys a little more acquainted with sort of the flow, right? And when does a hard money lender actually come in? So let's start from the beginning. I mean, look, finding a great deal is always step number one, right? It always starts with finding a good deal. So whether you do it through virtual callers, you do it through leads, you call yourself, SMS, whatever the case may be, the better the deal you find, this entire process will go better for you. So looking for gold, it's not just a statement of real estate. You truly win, you capitalize when you find something. You make money when you buy, right? Like that's not just a saying, it truly is a thing. So find a great deal. When you find it, we help you get approved, right? We send you a POF, you made offers with our POF, you got a deal with our POF, and now you got it, you found it. So the second step that we always recommend, and this is so crucial, and if you never thought about this, well, think it through and understand that there are ways to do business and there are good ways to do business. When it comes to the second step, the get terms and figure out your exit. To me, it's probably the single most important step. We find great deals all the time, but it's not until we actually start running terms and start thinking exit strategies that we determine that it truly, truly is a good deal, right? So you're used to looking for exits, right? Well, this is something that you can fix and flip. This is a piece of land that you can build on, but add the terms to it, right? There is our term sheet, what Souad was talking about on the video, the quick quote. We created a free form that you can find on our website where you can literally input your deal, and within 24 hours, like she said, it actually less, you'll get a full-blown fundable term sheet, a term sheet that will spell out all the costs for this loan if you or your end buyer were to get financing for this, which, by the way, roughly around 85% of all your cash buyers are borrowing from us. So let that sink in for a second. 85% of quote unquote cash buyers are getting hard money to actually close your deal. So please understand that it's just because they're not telling you they're doing it doesn't mean they're not doing it. So step number 2 really talks about you being able to figure out that step, right? Before you go and find an end buyer, you want to know what this deal would look like. Is it fundable? If I find an end buyer that can put 15%, 20% down on this deal, can they buy it? If the answer is yes, you got gold. Because now all you're doing is really just matching your end buyer to the set of terms that are here. Of course, the house too, but there is no sale, there's no house without money. So to me, you focusing on where the money's coming from and how it's coming is just as important as how much is this house is it going to cost to fix, right? So just let all that sink in. I know to some of you guys these are sort of new methods of doing things, and look, I'll be a liar if I told you that I didn't enjoy trying out new things. These are systems that have worked for us. These are things that we have put in place in our own pipelines and literally have little by little passed it on to our Discord clients. So anyway, step 2, you get your exit, you get your terms, you know what can be done with this property and how much is it going to cost to get it done, right? Now you put a contract on it. Now you lock it up. Now you put your deposit. If you have to put a deposit, you do whatever it is you got to do to make sure that this is actually your deal. Why? Because you know it's a deal. You're not gambling. You're not guessing. You're securing your position, the position that you just figured out. So even something like putting a deposit down if you have to becomes a lot simpler when you know you're not gambling. You with me? So eventually step 4, right? We get to the sale of the property. That should be buy, I'm sorry. Fund close. So we come in again. At that point, we're at the closing table. We make sure you have the money to close it. And now you buy the house. Now it's yours. Now you're going to go into fix it, build it, at a level, whatever it is you're going to do. And eventually you're going to sell the property and refinance it. Well, we come in again. Some of you guys are going to want to hold on to these houses. In fact, most of you guys are going to want to hold on to these houses. It's good to make $20,000, $30,000, $40,000, $50,000 on a fix and flip. It is amazing to make, let's just say, roughly $500 a month for the next 3 years. And then you turn around and resell this thing and make that 50, 70, 80, 90. So it really depends on what your financial position is. But we have seen that more than half of all of our borrowers, at one point or another during the transaction, they want to know what this deal would look like if they were the landlords. So after doing all the fixing, all the repairing, after making it look great, it's almost crazy to think that you wouldn't want to hold it, right? Like you wouldn't want to keep it if the numbers were right. So anyway, so this gives you the ability to do all that. The little helmet here, yes, we do a lot of guidance, a lot of coaching, just like Souad does with you guys on the wholesaling side. We guide a lot of our clients on the construction side, on the resale side, on the entire rehab portion of this. This is our timeline. So you start with an approval, you're going to get terms. As soon as you have terms and you have the contract locked in, we're going to order an appraisal, right? That's step number 1. We're going to order an appraisal. We're going to figure out the true value of this property. Within 2 weeks from there, we're going to give you a commitment, and within literally a week from there, we're going to close. So our average closing is about 3 weeks from today. If you got a contract today, it's going to take us about 3 weeks to fund it. I mean, we can do it in a little shorter amount of time if all the conditions are right, but the reality is you should have 3 to 4 weeks to set yourself up for the next step if you are going to buy and rehab the house. If you're going to wholesale the house, you know what? I should have brought that in too. A little thing in here to keep in mind: when you're contracting the house, you're going into the deal with financing, right? So we come in indirectly in here again to kind of save you out of this thing if we need to. So in other words, the fact that you made the contract contingent upon financing, because you have to go get financing from this hard money lender in order to buy the property, allows you to always be denied of that financing. And if you're denied of that financing, you get your deposit back and you're out of the deal, no harm, no foul. So we actually come in here quite a bit. Anyway, so I'm sure you guys have some questions on this, but this is the overall flow of what we do. How to qualify? I took this from one of our booklets. These are the basic documents that you guys are going to need. There's really not a whole lot. There are a few more on the rental side of things, especially if the property is in fact rented. But if it's not, it's relatively the same. Just so we're clear, all these loans are exclusively made under LLCs. They're not under your personal name. We don't lend to you as a person. We lend to that LLC. If you guys want to know the specifics as to why, we can get into it on the Q&A. But as of now, let me just, I want to get you guys to the next one. So these are the things that you're going to need. Pretty basic: purchase contract, some contact. We're going to have to run your credit at some point. Once the deal is ready to go, once you know exactly what you're going to get and you're ready to move forward, that's when we'll actually pull your credit, not before. And that's really it on the documents. Now, the last slide that I wanted to leave you guys with is probably one of my favorites. I mean, it's one of my favorites in a sense that I actually have pens made, and it's one of the handouts that we give at events and network events and so on. But it's a quirky little formula that I basically taught myself a long time ago. As I was coming into this business as a lender, as going from rehabber, builder to lender, I really needed to understand things more from like my end than the lender's end. So I kind of concocted this backwards, and it really is what it is. It's your ARV formula just backwards, but it works well. Like if you're on the road, and you want to know if your deal would qualify with a lender again, right? Like if this deal has to get financing, would it fit? How much of a down payment would my end buyer have to come up with? Or heck, at one point, more sooner rather than later, you're gonna want to know what the deal would look like if you were to do it before your end buyer. Mark my words. So this is that formula. It's real simple. You take your purchase price, you multiply it times potential down payment, right? 15 to 20% is usually a safety zone, if you may. Equals IR. IR is initial release. It's in essence the money that your end buyer will get at closing, not a penny more. And we'll rehash that in a second. So then you take that number and you add your reno and you divide it by the ARV, whatever you think that ARV is. That will give you the LTV. This is what every lender needs to know. Everything else could be gibberish until you get to here. If this number doesn't work, nothing works. So this is how you figure it out. And these are very basic examples. We're taking 200,000 times 15% down payment, right? The initial release will be 170 grand. We're adding 40,000 to that 70 grand, 40,000 in rehab. It's going to cost us 40 grand to fix the house for a total of 210, right? That's going to be your total loan. This is going to be everything you get to borrow. Then you take the 210 and you divide it by potential ARVs. So I use 300, 325, and 350. Right? At 300, it's 0.72 or 72% LTV. At 325, it is 65% LTV. And at 350, I'm sorry, 65. And at 350, it's 60. Right? So your sweet spot, your fundable deal, the deal that will go through with any lender, and will be a healthy deal overall, right? You want to sell healthy deals. You don't want to sell, bags of poopies. A healthy deal will have a 65 to 70 LTV. It won't have more than a 70 LTV. Now, not to tell you that somebody won't buy it, but from a lender standpoint, they're not going to get all the money that you think they're going to get, or they're not going to get all the money that they think they're going to get. So this allows you to figure out where you actually need to be. So for example, if the deal is, if the ARV truly is 325 at 210, you're at 65% LTV. It's perfect. It works. In fact, if you were to wholesale this, you can add 10,000 or so to this, and there's your fee, and it'll still be under 70%. So this is a quick back of the napkin type of math, but it'll as you play with it and as you try it over and over, as you see deals and you go with it, yes, it'll help you determine if the deal is fundable, but it'll also help you determine if the deal is healthy. Remember this: hard money lenders do not fund unhealthy deals. We do not. What's an unhealthy deal? An unhealthy deal is a deal with an LTV of 70 or higher. We'll fund it, but we'll make the end buyer come up with more money to bring our LTV down to 70. Or in this case, the end buyer will have to chop you down, or you, if you're putting the deal together, right? If you're making $20,000 or $30,000 in a wholesale fee, or you think you're making it, but you know that with a $30,000 wholesale fee, this deal is at a 75% LTV, you're getting greedy, right? You want to scale that back. You want to make the deal back. You want to bring it back to health. So maybe you're not making 30 on this one, you're making 15. But at the very least, now you know what you're selling. And more than likely, your end buyer is going to be a happy customer, a happy repeat client that's going to keep continuing buying houses from you over and over and over and over. Okay? So feel free to take it. I can answer whatever questions on anything. We got about 15 minutes of Q&A. So any questions or anything I can clarify, we'll love to. And again, thank you all for listening to my gibberish.
Okay, I have a question.
What's up?
You say 70%, anything above 70% is an unhealthy deal. Well, I have a lender that lends at 75%.
Yeah, no.
So when we do our deals,
I lend at 75 as well. You're not understanding me. I'm not here telling you who lends more. I'm talking about the health of a deal. I can lend you up to 75%, and the minute the market turns a little bit, as it has, I have a handful of borrowers who are not making the spreads they thought they were making. So a lender will lend you up to whatever comfort level they are. I'm talking about the health of the deal, man. The more leverage you go, the unhealthier the deal is.
Okay.
Yeah, at the top of the market, I was doing 100% financing. We 100% financing up to 75 LTV.
Okay.
Yeah, this right now, this isn't that time.
Right, absolutely. Yeah, I get what you're saying.
Yeah, man. So it's just a number. It's almost like a thermometer, right? Like, think of it as a thermometer. Like, it can go up and down. I mean, whomever's holding it, the hotter you are, the higher it goes, right? Like, so, but it doesn't change the fact that it might be too hot out. You feel me? Right. So that's really it. That's how you should think of the LTV. So, and frankly, there's also a lot of gimmicks with lenders where, yeah, I mean, they're offering you a 75 LTV after you've put your 20% down, right? Which is the same thing as a 70 LTV with a 25% down. So you can play with the down payments and measure your LTV. So
right,
it's don't go by that. Go by like I said, go by terms, exit points, prepayment penalties, commitment fees. What the hell is there? Underwriting fees, like all those things or castrate your deal. Like they add so much fat around your deal that the minute your 75 LTV becomes an 80 LTV because the market just dropped by 5%, minus your commissions, minus your closing costs, that 10% that you think you got in there, 10% of what? Of 200,000, you have 20,000, it'll fly like this. It'll vanish. So what I'm giving you here is just a thermometer, like thermometer for safety in real estate. It's truly what it is. When I started this presentation, I said that one of the things that we're known for is disruption. We like to disrupt in a sense that we don't want to charge the same heavy fees that we had to pay. It's like full circle to us. So what you see here and a lot of what we've done over the last 6 years has really been like against the grain, like against the wave, against the status quo, against the methods that hard money lenders did things, like from how you apply, like through one of our web forms. Like right before, they used to send you a PDF that you have to like fill out and sign and scan back and send it back to them. Like even little things, and then they'll charge you for an application to review your app, to pull your credit, like little things like those. It's just old ways of doing business. So with technology and what we have now, we've really been able to get rid of all that. The only fee I really got, these are my originations. So you see the 2% there. I don't remember the last time we charged 3% for anything. 3 points. That's a lot. But one of the things that I'm actually rolling out, and I'm sure you guys will hear it through Discord and through other channels, is we're going to be rolling out I guess the first nationwide flat fee hard money lender structure, where it doesn't matter like the size of the deal. We're gonna charge a $299 fee, $2,995 across the board. So just to put things into perspective, right? If you're doing like a $300,000 deal and you're paying 3 points, you're paying $9,000 in fees. In my case, you're paying $3,000. I am going to be the most hated hard money lenders by other hard money lenders across the US because of this. But I honestly look forward to it very much so. So anyway, so any other questions? Anything else that I can clarify for anyone?
You have one on the chat. Let me read it out loud. Can you take equity from an investment property for a down payment to another property? Would a hard money lender do that?
Yeah, good question. The answer is yeah. We can leverage one property and use it to, you can use it for whatever you want, but yeah, you can use it for down payment purposes, liquidity purposes. It's one of the benefits of owning real estate. Once you own one with equity, you can keep literally using it like a piggy bank over and over and over and over. Sorry, there's Randy. Is there a credit score for it? Yeah, when we're done, I'll make sure that you guys get my booklet with all the specifics of everything. So again, and I guess we can't stress this enough, credit is important. Whomever told you it isn't is lying to you and doesn't like you. Credit is incredibly, incredibly important. And as time goes on, credit will be more and more important. It's your social profile, and even though the deal itself is not based on you as fully you as an individual, it's roughly only about 30% of the entire thing is you, your credit, your background, and all that. The reality is that if your credit doesn't pass a certain threshold, you're just not gonna be approved. It doesn't matter how much experience you have or how great you've done. So in our case, we look at a 600 to 620 FICO for bridge. So pretty low requirement. It's not at the top of our requirements, but it is sort of standardized for it to become a necessity. So if you don't have it, you don't get to play, right? It's as simple as that. So a 620 is the least you can have. Prior judgments and stuff like that will mess up your chances. Now, when it comes to rentals, and this one's super important, when it comes to rentals, sort of a wild child still. And In those cases, you're looking at like a 650 FICO minimum. And if you don't have it, you don't get to be a landlord. So think of it in those terms, right? Like if you don't have at least a 620 FICO, you don't get to flip houses. If you don't have a 650 or higher, you don't get to be a landlord. So just, I guess, keep those figures in mind. But my suggestion as an investor, just overall, when it comes to credit, when it comes to borrowing from private lenders, banks, credit unions, and just overall reach and possibility, you should always have a 700 FICO or higher, right? Like your standard should not be 620. Your standard should really be like 680 to 700. It really shouldn't be less than that. A lot more opportunities will come your way when you have those figures, whether you need them or not. It'll help. One common question we have on this is down payments. You're looking at roughly 20 at any given point between 15 to 20% down of the purchase price. Remember this, a lot of lenders do this in different ways. The way we like to do it is we don't want you to put a down payment on the entire amount. So let's say you're buying a house for 100 grand, you're doing $50,000 worth of rental. We don't want you to put 20% down on the 150. We want you to put 20% down on the 100, just on the purchase price. It's another gimmick that a lot of lenders have out there to make you put bigger deposits. The reality is we don't give you any of the construction money right up front. So why charge you for it? Right. So keep that in mind. 15 to 20% down of the purchase price is what you should be getting.
I hope this video gave you a little bit more clarity when it comes to real estate investing with a hard money loan. Now, if you guys want to know more in terms of Arcad Capital, you can always check them out on their website, arcad.capital. There is a lot more info on their site in terms of expenses, term sheets. Everything is on there, truly. Everything is on their website. If you want to know more on how to get on these Zoom calls, you can always check out the description below. There is a link to the Discord chat. We have weekly Zoom calls every single week. New lessons, new speakers, new topics. It truly is one of the best ways to learn about real estate, whether it's wholesaling, investing, fix and flips, funding. Everything is on there. Every question that you want answered is going to get answered. So don't forget to check it out, linked in the description. Don't forget to subscribe and like, and I'll see you guys in the next video.